This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say, at PennyMac, greatness lives here.
This is The Interest. I'm Christine Stewart, and you're stuck with me hosting this broadcast today because all of my colleagues are golfing with the Connecticut Mortgage Bankers Association. Today's also the first day of the Travelers Championship, where the purse is $8.3 million. I'm guessing none of the golfers on the PGA Tour have to worry about making their mortgage payment, but for the rest of us, there's reason to worry these days. The MBA reported that payments have increased $513 in the first 5 months of the year. Mortgage rates inched up this week to 5.81%. It means fixed rates have increased by more than 2 full percentage points since the beginning of the year. The combination of rising rates and high home prices is the likely driver of recent declines in existing home sales. It's pushing some people out of the market. The latest numbers from the MBA show the median mortgage application payment increased in May to $1,897. That means it's more expensive to buy a home, whether you're an individual or an investor. In the first quarter of this year, more than 114,000 single-family homes and condos were flipped. That represents 1 in 10 transactions, the highest level since 2000. The jump marked the 5th straight quarterly increase, but it's not all good news. Adams' home flipping report also showed that as home sales by investors spiked, raw profits on those deals remained below where they were a year ago. That means that profit margins dipped to their lowest point since 2009. Among all flips nationwide, the gross profit on a typical transaction stood at $67,000 in the first quarter of 2022. While that was up 5.5% from the fourth quarter of 2021 and represented the first increase since late 2020, it was 4.3% less than the $70,000 level recorded in the first quarter of 2021. The largest flipping rates during the first quarter of 2022 were in Phoenix, Arizona, Charlotte, North Carolina, Tucson, Arizona, Atlanta, Georgia, and Jacksonville, Florida. While the real estate business is competitive, so is the mortgage industry. We've been working on covering a number of lawsuits involving originators poaching employees and customers from other companies. Our own Mike Savino talked to Deb Killian of Charter Oak Lending about her own experience with these aggressive business techniques.
This was a case of theft and misappropriation of trade secrets.
Nearly 20 years ago, Deb Killian sent employees from her Charter Oak Lending to a conference, hoping to develop their skills. But a competitor had different ideas. Instead of offering to buy Charter Oak, they just recruit some of the key employees.
The people that I paid to bring my employees to at a conference ended up being involved in the poaching of those very same people.
Those employees took customer data with them. Other workers eventually left too, worried about Charter Oak's future. The company still exists, but with Killian and her partner as the sole employees. The poaching problem is playing out again today, with several companies suing each other over similar accusations.
It's something that we see across the board in any highly competitive industry. And
Brian Reisterer has been a lawyer in the mortgage industry. He says the industry hasn't addressed this issue because companies don't want to limit their ability to recruit. But he thinks mortgage companies should agree on some guidelines.
Start to talk about the elephant in the room, which is nobody really owns the customer. What data do we really want to protect?
But what exactly should the mortgage industry do? Killian thinks some things should be clearly off limits.
Anybody that's recruiting out there should never be asking a prospective employee for their customer lists, which this company did, asking them what loans do they have in file, would they like to move the loan.
Reisterer agrees, but he also says a lot of companies feel the need to protect their investments developing employees.
The loan officers' interpersonal skills do matter tremendously, and there's huge value in that. But from the company's perspective, they see it as dollars and cents.
Reisterer says companies would benefit by agreeing to some standards, and he thinks a group like the NAMB is the place to do it, even if compliance is voluntary.
In any type of a trade association, it's going to be up to the membership to say that this is important enough to us that we're going to set a standard that we want to live by.
For the Mortgage News Network, I'm Mike Savino.
Thanks, Mike. It's not only poaching that's a problem in the industry, there's also racism. Meta just settled a dispute with the U.S. Justice Department over its decision to let housing marketers exclude African Americans and others from seeing some of their advertisements. This week's settlement was the result of a lawsuit brought 3 years ago by the Trump administration, alleging that Meta's ad targeting system violated the Fair Housing Act. As part of the settlement, Meta has agreed to deploy new advertising methods that will be vetted by a third-party reviewer and overseen by the court. And finally, citing inflation and rising mortgage rates, JPMorgan Chase & Company says it's laying off some employees and reassigning others in its mortgage business. The company's announcement follows job cuts announced last week by real estate brokers Compass Inc. and Redfin. Existing home sales continued their decline in May, falling 3.4% from April. The National Association of Realtors says it was the fourth consecutive monthly decline.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
For more on these and all of today's top stories, go to mortgagenewsnetwork.com.